Now we will talk about impact investing with our special guest, Helena Vinas Fiestas of BNP Paribas Investment Partners. All of the family offices and private banks that we speak to say their clients are becoming more interested in impact investment than they are in traditional philanthropy. What do you think is behind this changing mindset?
It's a really interesting question, because what is happening in the world of philanthropy is exactly the same what we're looking in the world of development aid, which is there is a sense of feeling that actually development aid or philanthropy might not achieve the results that the desirable results. And actually, by investing in social enterprises and local enterprises in need countries or areas, regions, or parts of the population, you can achieve much more. So you're absolutely right. What we're seeing is our wealthier clients are increasingly more interested in investing in impact investing, where it's not that they're expecting for high returns, what they're expecting is for a bigger impact and positive spillovers of those investments.
And can these wealthy clients play quite a major role in determining the nature of the investment and monitoring the progress of the investment?
It might depend on what type of investment and how involved they might get. What people need to really understand is that it's a type of investment that requires very micromanagement, because a social enterprise, they're very tiny entities, so you will not invest $1 million or, like you would do in a normal equity. You would invest very small amounts of money. And obviously, sometimes you will even monitor the social enterprise or follow the company giving it advice throughout time. So what I would say is that for those people who are interested, either you invest in a fund that does it for you, or you've got plenty of time to follow it, and the resources, of course.
But socially responsible investing in general, including impact in investing as a subset, you feel this is a philosophy that will have a much greater influence on the way we manage money in the future?
Absolutely. I think that there is, let me rephrase it. Following my example of the fair trade coffee continues to be a niche of the market, which has grown, but is still, only part of the market. But when we look at the rest of the market, what you have seen is that all the coffee companies or the coffee retailers have tremendously increased the policies and have improved the policies and the practices of how they source coffee. When you look at today, whether it's a Starbucks, a Nestle, whatever company, Unilever, they all look into the labor standards at the end of supply chain. This is what we call the mainstreaming of those of social or environmental issues. This is exactly what's happening in the world of finance, where you will have at certain minimum standards and issues that will be across the board. Climate change, human rights, and some specific, issues that are more emerging that will be restrained for those social and responsible investments, specialized funds.
Well, we hope to see you again soon to discuss the evolution of these trends. Helena from BNP Paribas Investment Partners, thank you very much.
Thank you.